We're continuing to keep our focus on the Indian economy, particularly from the perspective of growth. Apart from the big GDP number, the high-frequency data that we've been getting since hasn't given us much reason for optimism. What's the state of the economy looking like, and what should we be focusing on? Pranjul Bhandari, Chief India Economist at HSBC India, is here with us. Pranjul, lovely to have you here. Thanks for your time.
Thank you.
Let me start with a big picture question and then talk about some of the aspects that you flagged off. So what is it looking like post-GDP? So April to June, high frequency, is there any reason to believe that things are going to get better?
Well, we have a lot of data for July and August, but I'm afraid to say that things aren't looking very much better. You see some areas of improvement. For example, PMI services has gone up, some credit for personal loans has gone up, but on the other hand, PMI manufacturing is down, credit to industry is down, so can't really say we've bottomed out yet.
Okay. Well, so has it surprised you, the pace at which the economy has sort of deteriorated, for the want of a better word?
Well, yes. For instance, in the April, May, June quarter, we were not expecting growth to be as low as 5%. 5.5 perhaps wouldn't have surprised me, but 5 is way too low. And a lot of people ask, so what is it that really surprised you? And I have a hypothesis here. It was manufacturing where most of the downside surprise came. And if you break down manufacturing into organized and unorganized, what really happens is that the unorganized sector is proxied by organized. And here I want to organize data, and here I want to argue that some of the other unorganized sector indices, for example, currency in circulation or rural wages, they are low, but they didn't deteriorate between the March and the June quarter. So I don't think unorganized sector was much worse, but organized sector fell a lot. And to the extent you proxy unorganized with organized, you actually underestimated growth a little bit. Okay. So I think a little bit of that happened, but that, even if you correct for that, there is definitely a big slowdown out there.
And where was the organized manufacturing slowdown coming from? Is this a financing issue? Is it more than that?
Well, it's across the board, right? It's like a demand issue. People are not really demanding very much. Incomes are low, so if there's no demand, then you don't produce. Then there's funding issue, in their pockets of stress in which people are finding it hard to get cheap funding. So it's a mix of everything at this point, demand side and supply side.
Okay. So I think a lot of attention also got focused on the expenditure side data because of what it showed on consumption. Did you pay much attention to that in the sense of, it was a one-quarter number, so maybe it'll be better in the next quarter, or did it foretell a bigger problem to you?
Well, look, I think last quarter had been a bit higher than people had expected. So in some sense, it sort of balanced out. Anyway, quarterly GDP data is not very good, especially private consumption. It's actually just a balancing data on the GDP expenditure side. So you can't really go by it quarter by quarter, but if you take a more smoothened average, yes, private consumption has been falling. And I think the main reason is incomes. Rural incomes in real terms have just been growing 1 to 2%. Urban incomes is not very much higher. A lot of the growth was coming from leverage, which we were seeing, given by the NBFC sector. That has slowed. So all of this has made consumption weak, in this slowdown period. And
rural wages, there's been no improvement. I think you pointed out both just, not just agricultural wages, but non-agricultural wages is something to focus on as well.
Yeah, thanks for bringing that up. A lot of people talk about the current slowdown in terms of like the cyclical versus structural lens, or the lens in which they say that, it was a very unfortunate year, lots of things piled up, from NBFC crisis to volatile rains, to trade wars. But there's a third lens, which I think is very important, which has gone quite unnoticed. It is the interlinkages between the sectors of the economy. Some of it has strengthened more than people imagine over the last decade. Believe it or not, my analysis suggests that rural incomes depend a lot on shadow banks. And I'll tell you how. Earlier, about a decade ago, the main driver of rural incomes was agriculture. It was about 70%. Now it's fallen from 70% to about 50%. In the meantime, the role of construction in rural wages has really gone up. So if you look at construction, you find that about 70% of that is from real estate. And then if you narrow down on real estate, you find that it is very dependent on shadow banks. In fact, in FY18, 100% of the incremental credit of real estate developers came from shadow banks, not from India's commercial banks. So to cut a very long story short, until funding to real estate improves, I don't think rural incomes will really bounce back up in a big way.